I spoke about a Euro US dollar Forex swing trade that I took in an article called Trading Plan Unfolds, and then I followed up with an article about patience in trading. So I want to mesh the two together and talk about patience, supporting trade information, and not quitting on a trade before it's proven wrong. Now the Euro US dollar swing trade, it's been on the books since February 5th, and except for a large directional thrust on February 6th, not too much has gone on. Now in that article, the trade was up 145 pips, which is 2.5R. However, I took some profits off the table at 1.1338 on February 8th, which gave me a 2.1R. In swing trades, I like to take a portion off either equal to the initial risk or clear structure. Unfolding price action often dictates that part of the plan. I'm looking for a 4.9R on this trade, which will take it to about 75 pips off the current lows if price gets there. Now it's a challenge right now because of the range, and while that offers some great intraday trades, it's watching paint dry for swing traders. Now this yellow rectangle indicates the bigger picture range, and tucked inside of that is a tighter range indicated by the green rectangle. As of the date of the article, there's no information that told me to cut the trade and take the current profit of 128 pips. If no action is taken and this trade does get stopped out, I will make a handful of pips or 0.16R. Now the great thing about swing trading is you're not affected by every blip on the screen, as you really only check the charts 1 to 2 times per day. It makes being patient easier, but you can still be tempted to axe the trade when faced with the developing structure that we see in the Euro US dollar. So you want to keep emotions and the bias out of the equation as much as you can. Everybody will be able to do that to a certain degree, and the main difference is that those who do survive just did a better job at it. So let's break down what I'm currently looking at that supports my original trade idea. Using the dollar index chart is something I like to use when looking at any Euro US dollar trade. Since the DX is weighted very heavily Euro, it's a no-brainer to at least take a look at what it's doing. That said, it can complicate issues depending on your experience and the way you trade, and I won't use it solely to enter a EU trade, but it can offer some great supporting information. Now this weekly chart of the dollar index has had a healthy run up, and it's clearly in an uptrend. I see a bull flag near the high extreme of the move, which says to me that the probable move will be a break to the upside. Now, can we resolve to the downside? Anything's possible, but since we trade in probabilities, the probable move is to the upside given the nature of this chart. An upside move in the US dollar strength, which I need to occur in order to drive my trade to profit. Using the dollar index supports the trade idea of further downside action on the Euro US dollar. Now that said, I'm not trading the DX, but I am trading the Euro, so let's see what that chart's telling me. This pullback, it's not out of character for this downtrend. It's not exceeded with any conviction the symmetry of what is normal for the condition of this market since May of 2014. And B, a bear flag with obvious volatility contraction. I don't see anything that does not support the short trade at this time. Now, so taking everything into consideration, there's no reason not to give this trade a chance to prove itself, especially since there's no risk on this trade, bearing an outlier event, and 2, profits have been booked on a portion of the trade. Now, given this current stop placement, a directional thrust to the upside would probably take me out, but at the same time would almost invalidate the original trade idea. The probability is a thrust to the downside, but will gladly take a stop if I'm proven wrong. Now, I'm not seeing things that are not there, nor attempting to stay in the trade at any cost. I'm letting developing structure and any price action on the higher time frame dictate what I'm going to do in this trade. Now, since there's no risk on this trade, a strong break out of the consolidation around B could set up an addition to the current short trade. So my swing trade checklist, having patience, let the trade play out. Supporting information for the trade and for an exit, let the trade plan for the trade be proven wrong. Anything else, in my book, is emotional and knee-jerk trading. Now, many can do this on a discretionary nature. Others may find it a little easier to do with a swing trading system. Either way, I find it a key to